Hey everybody, Preston Bryn here with our Trader User Group Weekly Roundup. This is through this past Friday, August 1st, 2014, and we're getting ready to kick off really most of August, and then as we come up through the holidays at the end of August, summer officially kind of comes to the end, and we get into the fall season for most market participants, and we'll see volume pick back up. What I've got on the screen here is a monthly chart of the cash index of the S&P 500 SPX. And you can see here, I just wanted to kind of just show you a couple of things. Sometimes it's helpful to step back out and then we can jump back in a little bit and narrow our focus a little bit. But for now, I've got the monthly chart up here, and I want to show you a couple of things. You can obviously see on a monthly chart, bigger pullbacks, you know, they stand out on the chart. I mean, you can see these pullbacks when they happen, you know, they show up a little bit on the chart, but you can also see that this was in the summer, going into the summer, April, May of 2010. This was going into May of 2011. And then, of course, into the April timeframe of 2012. And then for 2013, we've just, you know, it was a rocket ship. You can see this upsloping trend line that I've got drawn on here. And now we got this tiny little blip right here. So this, in the scheme of things, for this entire period here, is really nothing. And again, with a monthly chart, excuse me, any severe pullback like this really shows up. Now the question on everybody's mind is, are we going to get a little bit more of a pullback where it does start to show up on this chart, which would take us down to this shaded area right here, which it will zoom in a minute. And then a little bit of a further pullback that would probably more rival something like this would take us back down to this area down here. But let's not get ahead of ourselves. Right now, we're just evaluating this past week and what's going on. But I wanted to just kind of show you this. The other thing that I want to highlight on here for you is we came right down and just about touched a fib extension off that pivot low and this pivot high that the markets made back in 2009, March 6, 2009 to be exact. And then when we started to really give it all up as we ended the summer months of 2007, and then we had this huge, horrendous pullback here. Of course, this is the dot-com bubble that we moved down for quite some time before we were able to come back up and pretty much hit on the SPX anyway. And then we actually officially blew through that level in the early part of 2013, and we have not looked back. Now, a very significant pullback in my mind would probably take us down to this level right here, which is just north of the 1700 level. But again, I wouldn't be surprised to see us come right back down to this area here. And we're going to zoom in a minute, and I'll show you the areas that I'm referring to. But you can see right now we've stopped right at that Fibonacci. I mean, we hit it. Now, it's hard to see on this chart, but we're going to zoom in, and I'm going to show you. If we come into the weekly chart here, you're going to see that green line is the 238 or the 38 extension off the prior major pivot low and pivot high on the chart. And you can see where we just came down and we hit it pretty hard right there, and then we're holding right there. You can see it held a little bit of support there for that week. And then you can see this highlighted zone here. And I call it a zone because, you know, you have support and resistance levels. I call them R and S levels. R levels for resistance, S levels for support. Right now we're sitting right on this level, and you can see this upslope and trend line with this upward vector here, which is very steep, I might add. Would not surprise me to see us take this vector out, take out that little area right there, and then come down and find ourselves in this zone right here, which again, the lower part of the zone is around 1850. The upper part of the zone is around 1865, 1870 area, right in that area there. You can see we've got a natural price level, and you can see that we've got a lot of support right in that area there. It was resistance as we came up, hit it, and we just kind of sat on it, and then it just became support, and now it's an S level. So this would be our longer term support level here. Should this break and we go down, I think you're going to see a little bit more panic come into the market. I think you're going to see volatility go up even higher, and then we can challenge this lower zone here as I delineated on the monthly chart. But again, you can see the lower part of the zone here is around 1725, taking us all the way up to about 1750 area right here. Now, also on a weekly chart, you can see here that we've got a cross in the MACD. It's the first time we got it since going into May, where it gave us that cross to the upside. We've had a very strong summer, May, June, and July, and now we're starting to give it up as we go through July. You can see right in this area here where we just could not quite have enough velocity, escape velocity, and the gravity was just too heavy, and it just pushed us down very solidly in 1 week, and we haven't had a week like this in quite some time. If we zoom in on the daily, I mean, let's just really focus on this now. You can see here these zones again that I pointed out, starting with the monthly, coming down to the daily here. You can see this area right here. That's that 3/8 extension off a pivot high and a pivot low, going all the way back to 2007 and 2009. So that's a major area there for us. I'm not sure if it's going to hold. I think the momentum may carry us up a little bit as we start the week, but then my fear is we're going to do one of these kind of numbers and then we're going to roll right back down again. We're going to test this upsloping trend line. Notice we gave up the 50 EMA right there. And then sitting right here in this zone is the 200 EMA. And you can see in this zone as I go into the daily, you know, it was providing support and resistance, and this is where buyers and sellers were really duking it out. Buyers finally took over here, but I think sellers are going to probably push it back down. And we could have something similar to this where we just duke it out and we get very challenged here. If it gives it up and we start moving back down like that, then I think you're going to see us test this pivot point here, which is in this zone down there, which is that 1725 to 1750 zone that I told you. Right now, we're going to be looking at, in my mind, I would call it the 1850 up to about the 1870 zone, which to me would be a good support area where we want to see if there's another battle that takes place that's very similar to this battle right here. Where, and again, we sat in this area here from March all the way through going into almost June. So 2.5 months, almost 3 months in that battle right there. And we varied a little bit. I mean, we got down a little bit, we got up a little bit, but the buyers and sellers pretty much kept it self-contained. That means, you know, should we go down a little bit further here and break this upslope and trend line, I would suspect, be ready for another battle, because now we got the 200 EMA also providing lift for us as we go through. The other thing that I was showing our members here, you could see here we were at that like that. You could see the MACD was just coming down. I was telling our members at the time, going into the July months where small cap was just giving up. Everything was just moving off into safety, starting right at that level right there. Right in that area there, things were just giving it up. Small cap was moving down, the rut was moving down, and I said, you know, and we started really back in the early summertime, back in this area here. I had suggested, I said, look, I've got 40% in the market, but I'm 60% on the sidelines right now, and that was pretty much right around this area right here. Now, we've ridden this bull market successfully going up, but we've been very light, or at least I've been suggesting very light exposure to the long side. And then when we started getting this bearish divergence here, it was, you know, and bearish divergence doesn't say how far down you're going to fall, but it does say there's going to be weakness coming and there's going to be a little bit of a dip. And I think this dip here was a little bit more significant than people thought. I'm not sure right now if it's over, but we had some technical damage done to the chart. If we do get a bounce back, and let me just blow it up a little bit here for you on the SPX anyway. If we do get a bounce back in the price action, you can see here this upward vector on the 50 EMA. I mean, it was pointing up. It went flat for a couple of days, and now it's got that kind of trajectory right there, which is a classic rollover at the top. And typically when you get that, you have the price action come back up and test it, hang out here for a while, and then come right back down, test the previous near-term pivot low, and then come on down to the next level, which would be there and then down there. So this is a classic move right here. I'm not saying that's what's going to happen here, but I would definitely be on the watch for it. So if we get a movement up here like this isn't a time to just everybody go boogie to the wall and all in. Watch some of these clear overhead resistance points, primarily the 50 EMA. And then, for our members, I'll be calling out some other potential resistance points as we come back up as well, and then where we're looking to the downside. But this was one that was telegraphed, folks. I mean, it was nicely telegraphed with the MACD. What wasn't telegraphed is the severity. The severity of a down move is never telegraphed. However, the possibility increases in a telegraph of the down move with some of these divergences that we got here. If we look on our DMIs, you can see here we got a huge separation here on this DMI. And what that tells me, typically when you get these kind of separations, you get a snapback, and that snapback could take us just like that. Once you get that snapback and then things settle back down, that is going to be the decision point, I believe. Do we go like that or do we go like that? And we're just going to have to take it a day at a time to see how this thing kind of moves forward. If we go look at the rut, the Russell, and here in the Russell, I wanted to show you guys again. This is where, remember I said early July it started giving it up in the Russell? Well, here's early July right here. Remember the Nasdaq or the S&P held up very nicely. This is going into July right there. You can see all of a sudden money just started leaving small cap and mid cap. I mean, it was in abundance. You can see that trend line. We caught this. We saw this. We hit this pivot high, which was a prior pivot high, because then the rut made a great run in this direction. And we played some nice securities to take advantage of that run. But it literally just hit this point here and then just rolled over, and it just has not looked back since. And really the S&P really didn't start rolling over until somewhere in this area here, but the rut had already given it up. And the other sign that this was going to be very severe is right in this area here. And we were watching it, and I pointed this out. And again, folks that are following along can make money with what we're doing. We had this little bit of a contra move right here. That's a classic, we're moving. We went from right here down to here. And what are we looking there? This was right around 1210, right? And then down in this area here was about 1150. So we moved 60 points, 60 rut points, right? That is a big move in the rut. And we did it literally in less than, what it was, 1, 2, 3, 4, 5, 6, 7. 7 days, roughly. 7 days we did it. 7 trading days, so a little bit more than a week. But 7 trading days, we moved 60 points. Huge move, okay? Then everybody's expecting a bounce. Actually, it moved more than that because we went down to 1130, actually, the bottom point down here, and that was 8 days. So 8 days, we moved 80 points, all right? That's 10 points a day down. Now, I didn't do it that steady. We had some big bite-sized moves like that in 2 days. But we moved 80 points in 8 days. And then everybody's saying, okay, we're oversold. We're going to get a bounce. And sure enough, we did. And we had some people playing this bounce. It was a nice bounce. I mean, we moved from 1130 all the way up to over 1160, right? We moved 30 points to the upside. So we made up not quite half of this rundown here. And then guess what it did? This is the sucker trap. This is when you hear people say bear trap. Then it just rolled right back over again, right? That is the sucker play right there where people load up right here and then it just fools them. They get out here and then I call it phase shifting. You got into the market at the wrong time. and your timing is off. So you just need to change your phase shift. So that's what happened here with the rut. So now guess what we're going to watch for? We're going to watch for this same pattern. Remember, we're going to come up like this. We're probably going to get a little bit of an oversold bounce. And then what we want to do is say, are we going to roll back down, or are we going to break prior pivot highs and move up? You don't really know, and I don't care what anybody says. Nobody knows. You know, you just can't. You can't do that. But this is what we got to watch for. So the rut gave it up. Let's look at the Nasdaq for a minute. The Nasdaq has been a top performer. Well, let's look at the spot into the cash. Nasdaq for quite some time. You'd never know that the Nasdaq was having issues. I mean, the Nasdaq looks more like the S&P. You can see right here in July. Remember when July, the Russell gave it up dramatically, right? Here's the beginning of July for Nasdaq, right in this area here. Here's July right there. So right after July the 4th. And it came down and we did one of these kind of numbers. And then we came right back up and we tested again. Remember, the rut was somewhere down around here as we going through July. But Nasdaq and the E-minis weren't. And then it just gave it all up because it finally moved down. When the rut just, had that little bounce and then just rolled over. So now Nasdaq came in and selling accelerated and expanded from just small cap to technology and Nasdaq stocks. You can see right here what Nasdaq did. It just rolled right over here. You can see also we had these signs that were starting to play out. And this is where bearish divergence or bullish divergence will help you guys out a lot. You can see right in this area here, we had a dramatic bullish divergence. I mean dramatic. From this point here to this point here, yeah, there was bullish and or bearish divergence, right? But it wasn't that dramatic. But then when we did that little swoop like that, and then we came back up, you can see here, that's dramatic bearish divergence. Now, some of you may have thought, okay, hey, that's a cup and handle. We're going to come down, we're going to come up, we're going to come down like that. And then, yeah, at that point, it suggests a cup and handle, which means it will break here and traditionally move another 10% to the upside in general. But so looking at this bearish divergence down here, I said, well, there's just not enough strength really to give us escape velocity up here. The odds favor a move to the downside, and sure enough, that's what we got. We got the cross in the EMAs. We're sitting right below. Now here, the 50 EMA is relatively flat vector. At the S&P, it was pointed down just a little bit, and we're sitting right below the 50 EMA. So we gave it up in the Nasdaq as well. If we look at the Dow, the final one I want to look at this weekend, and we look at, let me just find it here. Here's the Dow Cash Index. You can see here, same thing. I mean, we gave it up dramatically. And let me just kind of adjust my screen here so you can get the gist of this. You can see right here with the Dow, we gave up the 50 EMA. We're on this upsloping trend line right here, but we're just sitting just above it. I believe, again, if we get a snapback, it's going to happen across all indices. My fear is we do one of these kind of numbers and then we roll back over. Here's the 200 EMA right at this point here, 16,290. You can see this was the 1700 psychological barrier right there, or 17,000 rather, sorry. You can see as we made repeated attempts to break it, you can see the MACD going in that direction. And then we finally hit escape velocity up in this area here, or at least it appeared to. We did a double top. We were flat, and then we rolled over. So this is a slight bearish divergence. It's not as an ideal formation as we had on the other charts. But it does indicate that, we showed a lot of signs of weakness. And, of course, the first stop-off point was the 50 EMA. But we broke right through it, and we just blasted right down to the upsloping trend line. So this is kind of where we're sitting right now as we go into this next week. For our members, we got our session tonight. We're going to look at the week. We've got some currency things that we've been playing. We've got a number of in the energy market. We're looking at sector rotation. There's some real interesting things starting to happen. If you're not a member, I'd highly encourage you to come out and check us out. You can do it on a monthly basis or a semi-annual or an annual basis. But so far this year, we're doing very well. We're up in our portfolio, at least the one that I'm running. For our group, we're up about 58% year to date. We had a little bit of a hiccup here, but everybody did, but not much. We weren't in very much. We had most of our exposures in cash right now. So otherwise, everybody, I hope you have a enjoyable weekend. Members, I'll see you tonight. Non-members, if you want to join, check out our special offers page from our home menu, the button just under our video. All right, everybody, have a great weekend. And keep in mind, August is going to be, I think, like July, we're going to have some volatility in it. But of course, that shouldn't surprise you. We've been expecting that all along. And we've got some volatility plays that we've been doing that's worked out for us. So have a great weekend, everybody, and I'll see our members tonight. Bye now.